Okay, so welcome everyone. Today's module is going to be on momentum trading. We've teased this a little bit. Obviously, it's something that me and Spitty have built together and sort of formulated together over the course of our New York live streams. So I'm just gonna, as usual, just run through the notion. Um, just pre-warning you, this is basically three modules in one, so there's quite a bit of content to go over here, but super valuable. So just starting off with the prerequisites. So in order to get the most out of this module, you will need some prior knowledge on the following. You're going to need to know a bit about Merlin, the continuation candles of Merlin, the one-sided breaches of Merlin. You're also going to need to look into time-based liquidity. These are all in the cookbook, level 1, level 2, level 3 as well. So price action you'll find in level 2. So just go over the cookbook content there and you'll see the various bits that you need. Additionally, you're going to need the gold digger strat because this is kind of where this whole thing started. Spitty utilized the Merlin continuation statistics on a lower time frame that still provide an edge, and he applied it to gold in a specific scenario. And together we've built upon that. So that's where we are today. So, like I said before we start recording, just a quick warning: this is an aggressive scalping strategy that requires quick decision making and strict risk management. Whilst testing, we recommend using extremely small size or ideally paper until you are comfortable with the concept, because this is quite advanced. Okay, it's very simple. We present it in a simple way. We have a complete structure to it. We have regressions to start from the very beginning, from the very basics, all the way up to the more advanced ideas. But this is inevitably an advanced concept because it requires speed, aggression, that kind of thing. So we'll crack on. So time, as seen during Hairy Traders live streams, New York Open is our preferred session for obvious reasons. More volume, volatility, and liquidity. So these are crucial for catching the best momentum trades. The timestamps that we typically look at are going to be 9:30, 9:45, 10 a.m., 10:30, 10:45, 11 New York time. So we're just looking at those key times where we're getting session open, we're getting a high time for candle turns, we're getting 15-minute candle turns at least, really. But the point of that is these times we're more likely to see either a run of liquidity or expansion. Okay, so bias, as always, an accompanying bias will aid you in any setup you take. You are far more likely to catch a better trade and hold on to it for longer, but it is not crucial to this strategy. Okay, it's just preferred. We have numerous pieces of content on bias, from candle framing, percentage-based levels, inefficiencies, and other forms of draw and liquidity. So you can go and find them throughout the various courses and modules in WOP. Right, so this is essentially where we're starting off value. So first of all, let's expand on the idea of value. And this is probably an entire module in of itself, but it's vital that we understand, just so we don't go chasing dildos on the 1 minute chart. Okay, so this is really, really critical context building here. We're looking to implement this strategy successfully, then we need to be able to understand value. Okay, so the context is critical in implementing the strategy, and it will be where most people fall down. Okay, so this is where most people will fail. So this is a really, really important place to start. So traditionally, we determine value by a simple fib. I use the 50% as simple premium discount. If we're in the premium, I'm looking for shorts. If we're in the discount, I'm looking for longs. Okay, but this can be pretty subjective because you have to actually draw the Fibonacci. You have to pick the pivots, and you need to be able to actually identify that 50% premium discount. Okay, so a little bit subjective. So what we're going to focus on a little bit more today is time-based liquidity. And again, this wasn't a module in the beginning, but we're just going to expand on it a little bit more today. Okay, so the session liquidity that I'm looking for is I'm looking for Asia, London, and I trade New York AM. So my timings, again, all New York time because they don't change. Daylight savings can do whatever the hell it wants, but my times don't change as long as I stay in New York. Okay, so Asia session is 8 p.m. to midnight. London session is 3 a.m. to New York Open, and then New York Open AM session for me is 9:30 to 12. I'm typically not doing the PM session these days. So how do we utilize value in this regard? So the area above Asia highs would be considered a premium, high value, in which we would look for shorts. Area below Asia lows would be considered discount, low value, in which we can look for longs. Okay, so this is just a very, very simple way of utilizing a fixed time period in which we have a simple range. In that range, we can determine premium and discount. Okay, so it's not a subjective pull on X pivot, Y pivot. This is the Fibonacci range that you should be using. It takes away the subjectivity of it a little bit, and there it is. So in this example, you can see quite nice sweep 8 London highs, sweep London lows. Okay, yeah, little bonus there for you as well. From the data I collected, there is a 64% chance of both Asia high and low in my given time range here of being run across the entire day. So we'll talk about that a bit more later. And funnily enough, I took a trade on the basis of that today. So more on time-based liquidity. So sessions aren't the only time-based liquidity, of course. We can use high time frame highs and lows ranging from 15 minutes all the way up to the monthly. Me personally, I define a high time frame candle as 15 minute and above. Obviously the 15 minute is that high time frame, but when I'm utilizing my accompanying candles, so I'm looking at like 1 minute CISDs with a 15-minute candle, that is the high time frame candle I'm utilizing. Okay, so I simply use 15-minute to monthly. All right, so here's an example of a high confluence area in which we look for momentum. As with most technical analysis, confluence is an added bonus, so it's no different for time-based liquidity. So in this example, you can see previous 4-hour high in confluence with Asia highs, and that offers a nice strong move. Funnily enough, that was also the previous day high, and it was also the previous week high, with a big massive high time frame 886. Okay, so you can see how you can begin to overlay that time-based liquidity and how you can use them in confluence with each other to determine areas of value. Okay, so that's essentially what we're doing here with time-based liquidity. So other ways of finding value are things like the value area, volume-based levels, TPO. And for this, I'm just going to refer you to Spitty's refresher modules. If you've never done the original modules, then go back and watch them. But the refresher modules are pretty much everything you need in that regard. I don't know why that says no access. I'll fix that. But fib projections. So this is another way to determine value. These also offer an area in which price has extended away from an initial move. So these are best utilized in confluence with time-based liquidity. So my personal favorite is standard deviation pulls. You should probably know these by now. If not, watch key zones and I'll figure out why that's no access. Here is a quick example. So as we know, I'm looking for a move that runs liquidity, and I'm looking for a sharp move down, and I'm looking to measure that move. Okay, so I'm simply just looking for this kind of pattern. Okay, I'm looking for a whoop, boop, that kind of thing. Right, so we measure the run of liquidity before the larger move, and this will give us our projection targets. Another favorite of the group, you've also got like trend-based liquidity. Sorry, trend-based fib extensions. Okay, so then you've got like the 2618 here. So this is also offering you a point of value because it's an extension away from a move. Okay, so they're another way of finding value. Another way of finding value, so there's a bunch of ways of doing this, and I'll tie it all together in a moment, but midnight proximity. So again, you've heard me talk about this a bunch of times, but New York midnight is a high hit rate level, and it acts as somewhat of a fair value. Okay, so when we're below midnight, we prefer longs. When we're above midnight, we prefer shorts. Okay, similarly, I can never say that right, VWAP proximity. Okay, so seek trades that return to VWAP. More on this topic in the next module. Okay, little teaser there for Spitties next week. So very simple idea. We're looking to trade toward midnight and trade toward VWAP. Okay, we're seeking that fair value level. Okay, we're looking to be in an area of value when we trade. So here's a little example, and that is the example from above here. So this was an actual trade that me and Spitty took live. Here is the actual recording of that session, in which we both utilized the concepts that you're seeing right now. Okay, so here we had a trade taken by both coaches during a live stream. Value was determined by a simple premium discount fib, a standard deviation pull, proximity to VWAP at midnight, and it was also below Asia lows, below London lows, and below daily lows, before a sweep of a 15-minute low and an SMT. Okay, so this is a lot of factors. That's many factors, and that is not critical. Okay, so one or two may suffice in most instances. Okay, but what we're doing here is I'm just painting a very obvious picture of value. Okay, so we're below previous day low, we're below session lows, we're in an extension of area, we're miles away from VWAP and midnight. Okay, so we're in an area in which we can determine the more valuable or the cheaper trade, let's say, or the value trade is to go for longs. Okay, we're not seeking shorts in an instance like this because we've determined the value favors longs. Does that make sense? So in this instance, we're coming off this second standard deviation. We've got some nice SMT confluence. We've swept some 15-minute lows, and then we start to put in that momentum up towards the EQ, fair value, midnight, VWAP, all that jazz. Okay, so this is just a really good example of a trade that both me and Spitty took, where we had determined that the value was on the long side. Okay, so that was a really important section. So if you do need to revisit that, please do. This obviously is recorded, but that should make sense to most of you. Okay, but that is so critical because what we're about to go on to next is the entries and why to enter and how to enter and that kind of thing, and how to catch what the topic is today, momentum. Okay, but if you just go chasing 1 minute dildos anywhere and everywhere, you're going to get fucked, and this is where most of the people are going to get it wrong. Okay, so you have to determine value before you even can consider it. Okay, and it has to be during that New York session, that really key time. Okay, so New York momentum strategy. So let's start off with momentum. So if we refer back to Spitty's Gold Digger strat, we're looking for this kind of pattern. We're looking here for, looking for low time frame continuation candles, and we're looking to spot that momentum. Okay, so we want to see speed, volume, force, intention, displacement, aggression, whatever phrase resonates with you, but we need to physically see the momentum. Okay, so if that sounds difficult, then you just need to spend a little bit more time observing the candle's behavior. Okay, so that's going to be the first real step in utilizing this strategy. So we've got some captain's views here. So Spitty's going to jump on and actually run through these a little bit as well. You muted, Spit.
Sorry, I just realised I was muted. Professional. Right. Following on from obviously what Kate's just been saying then. Right. So this is my definition of momentum scalping, okay? Because there's other people, if you do follow other courses, other mentors, they will define this slightly differently. But for me, because I am a mean reversion trader, I want to see price hit a level and reverse and move away from it quickly. So for me, price action delivering from predefined AOI, not a random placement, and I want it moving fast, okay, or one time framing, as some people refer to it, in the opposing direction. For example, again, it's mean reversion trading, but I want to follow the aggressive participants. As we all know, the only thing that can move a candle is delta. A limit order cannot move a candle. So I want to participate where the aggression is. I want to follow that aggression. Okay, so fast moving candles in a single direction. It's as simple as that. Okay. Now, I want to make this really clear, and I know Kate said this right at the beginning. This is advanced stuff. If you do not like quick movement, this is definitely not for you. However, if you do like quick movement, you need to ensure that you're utilizing a very liquid asset. But you also want a volatile asset, which is why, for me, momentum trading works best on something like Golden NQ. I would not momentum trade ES. even though, as you've seen, all the stats that I keep presenting to you guys are based on ES. But ES doesn't have that momentum like NQ and Gold can have. I would definitely not do this on any altcoins. I wouldn't even do it on Bitcoin anymore. I used to do this on Bitcoin, but I wouldn't do it anymore. Okay? But effectively, if you are going to look to trade this, you need something that's got a proven track record, and you need to ensure that your continuation is ideally, for the minute one candles, above 60%. Again, that's utilizing Merlin. 99% of these trades are long. Okay, that's got to be clear on that. Momentum trading short doesn't always work out in your favor, purely because it takes time for the larger participants to exit a position, which means price action, typically speaking, at a high, rarely rejects and goes straight down in a straight line. However, a V reversal from the bottom does work out more often than not. Now, for areas of interest, again, I keep this very simple. This is nothing like how I trade Bitcoin. Okay? All I want is a solid level or a liquidity zone. But the bulk of my stuff, as you guys have seen on stream, value area high, value area low, point of control, even if they are developing the same day, because again, I'm looking at intraday low time frame trades here. I'm not looking at macro swings on this. VWAP bands, that will get covered next week when I cover the VWAP based strategies. And as Cake's already said, time based liquidity. Okay, and I will have an example for you on time based liquidity from yesterday. When momentum trading NQ, you will see from the New York streams that I use ES and NQ coming into a predefined level. And that's my confluence. Okay, so you guys, when you see me trading Bitcoin, I'm looking for 3, 4, 5 or more levels of confluence to take a trade at a specific level. When I'm doing this, I can be looking at maybe 1 point of confluence on NQ and 2 points of confluence on ES, and that's good enough for me because I'm using the assets together. Okay. Bottom line is ES is alpha, NQ is beta, or beta, depending on where you're from in the world.
Beta.
But ideally, as I've put there, I want it to be far away from VWAP. I want it to be far away from developing point of controls, TPOCs. Okay, I want that trade to have room to move. If it doesn't have room to move, I will still take a view on it. But if it's a really tight range, especially within New York, you'll have seen us countless times on the New York streams where I'm not interested. I am not interested. If I've got a VPOC developing day, a TPOC developing day, value area high, value area low, and a VWAP all floating around within a few points of each other, I'm not bothered about trading that. Because I don't have something that I can work with. I don't have the chance for momentum. Okay, not in my favor. So, when it comes to the methodology, the formation of the candle is everything. Okay, as I said right at the start, I just want fast-moving candles in one direction. That's all I want. I want momentum. Okay. If this does happen in your favor, let's say you've taken the trade and you do see these fast-moving candles in your direction, you can go risk-free relatively quickly, and I typically do. It's one part where Cake and I sometimes differ, because Cake might be trading the same idea, but he might be seeing something that more lines up with some strat that he normally trades. With me, I just want to smash and grab, which is what gives me that higher win rate, so to speak. However, it also means that I do get stopped out at break even quite frequently, but it means I'm not losing on it, and I'm fine with that. Okay. Take profits. Go on, mate. Sorry.
Yeah, I was going to say, yeah, we will discuss how to utilize that sort of variance of risk appetite, let's say.
Yeah. In short, if try not to speak on your behalf here, Cake, but if it's delivering from one of Cake's standard areas of interest and it gets a momentum trade out of it, well, that's got the chance that he won't mind if it pulls back a little bit. Because he might see a gap there, he might see an order block there, he might see something else there that he's working with. Now, I don't look at these things. So therefore, for me, I'm just smash and grab. I like that reaction off that level. I like the momentum out of that level. As soon as it starts going in my favor, I'm risk-free quite quickly because that is my trade setup. Okay? So I don't want to see going into negative drawdown because I'm not looking at it as a bigger picture. I'm just looking at it as that 1 minute candle. Are you moving in my direction? Yes, cool. I'll keep with you. Okay. Now, for take profits, it's a little bit subjective. Similar to the gold digger strat, it's subjective. I want to go as long as that momentum's there. Now, if I do take a trade, and let's say, for example, it's within 3 of these 1 minute candles, it's already coming into VWAP. Well, that's the smart thing to do. Take a chunk off. And I will often take a large chunk off at that point. Okay, it's a little bit different. It's hard to say percentages. It's hard to say how many contracts because we all trade on different platforms. Obviously, I'm not trading with contracts when I'm trading NQ. Okay, but I will take more than 50% out. It's probably the easiest way of saying it. Then the rest of it, I will trade my stop loss and just let the price action play out. Okay, the alternative way of doing it is purely trading your stop loss. So you're moving your stop loss under each previous continuation candle because you are utilizing the fact that if you do get a continuation candle, the probabilities of taking the previous low is very low, especially if we're using something that's got a higher percentage, which is why I do like things that have got 60% plus chance of continuation on the minute one candles. Now, obviously, if you do start to see ES coming into a major level, but NQ isn't quite at a major level, then I will utilize ES being at a major resistance level as a take profit. If, on the other hand, it continues running and I've got a small runner that I leave, and say it goes for more than 10 minutes as an example, then I'll zoom out to the 5 minute. And I'll start utilizing high time frame. Or higher time frame in a scalping context, should I say. And I said, well, all right, well, in that case, I'm going to start trailing minute 5 candles, or I'm going to look at market structure. Now, that I shouldn't have to teach you because that's all in the modules. Yeah. And that's it, really.
I've got a nice little example from today. So I shorted earlier today on NQ, and I was just trading 5 minute candles. So my stop loss was at the top of this 5 minute continuation candle. It took me out here. And look, price reversed against me. So I caught the momentum down. Momentum shifted, but I'm not worrying about any of this move up because I've already played the probabilities on the way down. If I'm going to catch a move that's going to keep going, then the probabilities of expansion are likely, the probabilities of continuation are in my favor with 5 minute continuations and OSBs and things like that. So we're going to cover this now. So that's how Spitty's looking at it. Looks at it in mostly the same way as me. We're gonna go back over a few of the things that he's mentioned there. In terms of the relationship between ES and NQ, I think Spitty's much more advanced in that regard. I typically just look for ES to show me a direction. Most of the time, I always judge ES as the alpha and say like, well, if ES is showing weakness, typically I would expect NQ to do the same. But anyway, we're going to go back over some of this stuff. Let's make some progress. So, entry/trade management. So, we are seeking a 1 minute continuation candle from an area of value, okay? And we enter at market with a stop at the lowest low, the highest high of a sweep, okay? So, we're going to go through this scenario now, right? And look what I've got over here. I got a pen. Yeah.
Wiggle. So,
with this example, okay, so what have we got here? So we've taken out London High, okay, so just determining value simply by time-based liquidity, session liquidity, we've taken out London High, okay? So what have we seen? We've then seen a viable entry on a 1 minute continuation after a sweep of London Highs, okay? So this would have been our entry on the 1 minute candle. Little bonus there, we've got a nice 1 minute inversion as well, okay? So in this situation, we've entered And we can start to utilize Merlin's continuation logic. Okay, so we then look for the continuation of momentum by utilizing Merlin's low time frame probabilities. Okay, so there's a 62.6% chance that a 1 minute candle will take the low when it's bearish if it's a continuation. Okay, so at this point we can look to play the higher probability direction, placing our stops in the low percentage areas for protection. Okay, so move that ahead. Now we can see that once we take the low, we now have a 27% probability that we're going to come and take our stop out, because OSB dictates that we'll take one side with a 73% chance on the 1 minute. So even on these low time frames, you're still finding a massive edge with Merlin, okay? And this is pretty much where this strategy has been birthed from. It's these low time frame probabilities, okay? So when these are going to be at their best or at their most effective is during this momentum, is during these candles that just trade like this. Okay, and that's what essentially the strategy is all about. We're looking to catch that, okay, but we're looking to identify when it's about to happen. Okay, so in this instance we could just move our stop to that 27%, and we know we've got our stops in a low probability area. Okay, so in this next instance, we could say, right, we are now printing more continuation candles. Therefore, we can now move our stops into profit at a percentage as a low probability area and lock in a win. Okay, so if our entry was at this first continuation candle here, we can then say, right, we've just taken the low again, and we've just put in another 1 minute continuation. So based upon Merlin, we've got a 63% chance we're going to take out this low and a 37% chance we're going to take out this high. Our position is up here, so we can simply just move our stops into profit. Okay, and that's essentially what Spitty was talking about with his methodology. And this would be the more aggressive style, okay, of risk management.
Yeah.
So once we hit that AOI, New York Open, VWAP, this trailing stop is now a very logical decision, okay? And this is the kind of methodology or the kind of way that you really should be starting with this, okay? And because it's effective, you're going to have a high hit rate of trades, and you're going to probably hit a lot of successful trades, okay? But what I want to do is I want to explore the possibilities of this style, okay? So moving on, what if we were to move our stop here? What would have happened? Well, we would have got taken out at our stop. Cool, we made money. You could be more than happy with that, okay? And most of the time, you will be happy with that, okay? But in this instance, you would have been taken out before the move could continue. So how can we mitigate against that? Okay, so this is what I want to explore a little bit more, and how, I suppose, I mean, it's very similar in the way we approach this, but I, like he said, I like to utilize more of the low time frame price action to be able to determine whether I think we're going to keep going. So in this instance, what we could have done is we could utilize the price action markers that we had at hand, which is like bearish gaps. So if we are truly bearish, then bearish gaps will hold. Okay, so if we would have left our stops at break even, then in this instance we would have actually been protected, and we still would have been in that position. So they would have given us the chance of catching that larger move. Okay, but the thing is, this requires experience and most of all a plan. Okay, and this is a factor that I want to introduce into this strategy, right? It's the untapped session liquidity. Okay, so this is an example where we had Asia lows and London lows still intact. Okay, so I see that as a draw. All right, so what we're able to do is just offer this very simple element and say, is there untapped session liquidity to the other side of our momentum trade? Yes or no? If the answer is yes, then we can look to potentially take that trade a bit further and be less aggressive on our risk management. If the answer is no, then potentially we'd be more aggressive on that risk management. Okay, so this is just one scenario that I just wanted you to get thinking about, that kind of thing, right? So we move on. We then look at, right, now we're in a new AOI. We've just taken
London. Can I interrupt? Sorry, mate.
Go ahead.
Can we just go back? So just to expand on this with what Kate's saying, and obviously this is the key difference between how we both approach this. I want a real quick smash and grab, but in this instance, Kate's noticing that, well, we've done something very logical, like taking London's highs, so your time-based liquidity. We've had a really, really good reaction because it's not just a continuation candle, but it's a continuation candle that's created an inversion. So there's real intent there, to use Kate's words. Okay. So when Cake starts then looking at this and it carries on moving in his direction, he's then starting to look at a bigger picture about where to grab liquidity. Now, I wouldn't. So in this instance, I would have been stopped out on that candle that came back up. So therefore, I would have walked away with this trade with roughly, just for argument's sake, about 0.25 R.
It was 0.3 to be precise.
No, not point. There you go.
Well done.
That's not bad for looking at it like that.
Yeah, well done.
So, but what's really important with this is because it's a very aggressive strategy, and you either catch a really good runner, like you saw in yesterday's stream, a couple of really good runners, or you catch break evens or really small wins. So in this instance, 0.3R. You need to ensure that you stick to your trading rules. If you reference not yesterday's stream, it was Wednesday's New York stream. We took, 3 trades in total?
Yep.
1 win, 2 loss from memory.
Mm-hmm.
And then that was it. We both said exactly the same thing, not following off each other, but we both said exactly the same thing of, that's me done. Because you're sticking to your rules. The hard thing about this strategy and why it falls into an advanced strategy is it's very easy to get carried away and carry on trying to do it. Mm-hmm. So you need to ensure that you stick to your rules, because the thing is, if you're walking away after a session with 0.3 R, just as a really blanket generalization there, it's very easy to go, it's not good enough, isn't that? It's not good enough. But it's also very easy to give that back and then turn that 0.3 R into a loss. Yeah. Because you continue going. So it's very, very, very important that you stick to your rules.
Yeah, okay? And with this example, like, what we'll go into this more in the rest of the module, but like this is just an example of a contextual environment where you can be, looking for that bigger move. So we are trading from London highs, but we're targeting London lows and Asia lows because they're still intact, because there is a very high probability that we're going to take out both Asia high and Asia low. 64% probability. I know that's not 90, 80 plus like we usually hear these days, but we have been spoiled in that regard. But there's a 64% chance that you're going to take that Asia range out during the day. And when you're delivering from a London high in the manner in which we did, it makes sense to look for that liquidity. Like I didn't actually trade this, but I was looking for those London lows and London highs. London lows and Asia lows. That's what I was looking for, and you will typically see me doing that during those streams. I gravitate towards the session liquidity that is yet to be tested. So we'll go over this more in the rest of the module. But is there anything else you want to add, Spit?
No, I just wanted to cover that about rules, because obviously everything part of this particular way of trading is very open to really fucking up your accounts.
Yeah, and we do touch on that as well later on in the course as well. So
sorry.
No, it's all good. We're gonna crack on. So now we're in a new AOI. Okay, so we're determining value by we've just swept Asia lows, London lows. Right. We're now we're in the bottom half of the New York range. This is an area of value in which we could probably look for longs. Okay, so now we're in a new AOI, we can begin to look for another momentum trade. Okay, but I want to ask a quick question. What is the difference? What is the key differences that you can spot? And I want to hear this in the chat if you're still paying attention. ADHD Kai's already left. What is the difference between that low that you're looking at right now and that high in terms of a reaction? In terms of how did we react to value? So it was hearing less impulsive, no immediate reaction, didn't print a continuation candle. You're all kind of there on the same lines, but It's pretty much exactly that. It's the fact that there is a much more aggressive reaction from these highs, okay? There's a much less aggressive reaction from these lows. Exactly, it's not a V shape. It's not, we don't see an immediate reaction. We don't see inversions, that kind of thing, okay? Here, in this instance, if we were to go and trade that first 1 minute continuation candle, this would be an instance where we would probably want to be more aggressive with that risk management and trail much, much more aggressively. Whereas in this high, I go get my marker, over in this high, we do see that really aggressive reaction, okay? So we're seeing the intent there, right? Which may tell us to be less aggressive on our risk management, okay? So there's just little simple things to pick up here. And it's hard to simply define how a reaction is, but you can just see visually, you can physically see the difference here. This takes 1, 2, 3, 4, 5, 6, 7 minutes, 7 1 minute candles to actually print its first continuation. This takes 1, 2, 3. Okay, so it's less than half the time. So that's just something to consider, right? Now we're going to go and build out a little bit more context, okay? So next, if we now consider time of day, okay, so we're going to pull back to time of day. What is happening in the next 2 minutes? Well, if we consider there's going to be a new 15-minute candle in the next 2 minutes, and the likelihood of a 15-minute continuation is around 69%, is it a good idea to be trading a continuation candle from a sloppy reaction? Probably not, right? So this is where it is really important to not only consider what the reaction was like, but the time of day. Because like I said, the time of day will very much have a weight on whether we are going to run liquidity or whether we're going to expand, okay? And at that 15-minute candle turn, and I define a 15-minute candle as a high time frame candle, we're probably likely to go and run that 15-minute low, okay? So we move on. We do, right? So now let's just look at this because there's quite a lot going on. So we've run the 15-minute lows, okay? What do we notice immediately? Much, much sharper reaction, okay? So we ran 15-minute lows, we have a much quicker reaction, and we have a continuation candle literally within 2 or 3 candles, similar to this, okay? What else happens? Well, we create a fair value gap, okay? That is a big, big sign of momentum and strength, okay? So at a key time, when we've taken a low that we expect to be run, we've produced a much sharper reaction with a continuation candle much sooner, and we're beginning to print FVGs as well, okay? And what happens? We immediately move towards fair value, okay? 50% of the range, VWAP, midnight, okay? So it is very, very important to be aware of your high time frame candles. We are trading 1 minute continuation candles, but do not stare at the 1 minute chart, okay? Only look at the 1 minute chart when you're entering these areas of value and determine what has the reaction been like. How long has it taken for that reaction to happen? Was it a nice sharp reaction? Did I get my continuation candle pretty quick? What kind of lows am I sweeping? What kind of highs am I sweeping? Have I created any fair value gaps? All things like that. What was the volume like into the low? All this kind of stuff, okay? Am I trading toward fair value? Am I trading toward VWAP and midnight? These are all really, really important factors, okay? But you can just see the stark difference between that low and that low, okay? Much more similar to that. So these are the kind of moves we're looking for. Nice, sharp V shapes, okay? So let's move on. Another way to determine greater momentum is to simply just move up in the time frame. So Spitty touched on it a little bit as well. But what we can do here is just move up from the 1 minute to the 3 minute. What do we notice? 3 minute produced a really nice 3 minute continuation. It also produces another one with a fair value gap. And this is a great way of determining more momentum, okay? Or greater momentum. Bullish gaps are holding. So we then go from the 3, we can go up to the 5. What do we notice on the 5? Well, we just produced a big, massive 5-minute bullish continuation candle with a big fat 5-minute FVG. And now we're starting to utilize those OSBs. So we've taken the 5-minute high, so the 5-minute low becomes low probability. We then take the 5-minute high, so the 5-minute low becomes low probability. And we're just looking to determine where is price currently pushing toward, okay? And we could do that once we're in the move. We can start to zoom out a little bit and start to take a look at the bigger picture, okay? And that's really, really important to do in this. Next, you then look at the 15-minute, okay? So what's the 15-minute done? Well, you had a big 15-minute EVP, you had a 15-minute CISD, and now you're starting to put in somewhat of a 4-hour swing, okay? So if you really want to catch like big momentum trades, and I gotta point out that is extremely possible with NQ, and this is a long one, you have to be open to the higher time frame picture. And now that is quite advanced, okay? And that's a stage that you're going to get to once you practice the quick smash and grab stuff. And if you want to just do the smash and grab stuff, that's absolutely fine, okay? This is a very varied approach. But what I'm trying to show you is when you are trading from significant value, you're able to recognize momentum. You are capable of catching much bigger moves, okay? Especially in this asset. So, quick summary. This is an aggressive strategy, but a very powerful one when applied to the NQ. You should begin by utilizing the more aggressive risk management style with minimal to no risk. As your experience builds, consider the wider context and how to utilize that data. Okay, what data is being provided to you? How are you going to utilize it? You start on the 1 minute, you utilize the momentum, you look for gaps to form, you look for the V shapes, you scale up to the 3 minute, to the 5 minute, even to the 15 minute, and you can begin to see the bigger picture, okay? Now, I'm not saying swing for the fences and go for crazy targets like I did yesterday with that Newswick. That was obviously a bit of fun, but what I'm trying to say is you need to try and strike the balance by utilizing these probabilities and also making sure that you're protecting yourself from risk. So, trailing aggression can simply be determined by whether you trail larger or smaller candles. If you trail by 1 minute candles, you are being more aggressive in your risk management. If you trail by larger candles, you are being less aggressive, okay? And you need to figure out when to like put your foot down and be less, be more aggressive, or when to step back a bit and be less aggressive, okay? So that's where this is where the advanced part comes in, okay? So for instance, trailing 1 minute candles may ensure you lock in some profits quicker, but trailing 3 to 5 minute candles will open the door up to a larger move, okay? It's down to your discretion on how you should proceed in any instance. Track each trade and learn from every one. Those who do will progress much faster, okay? Okay, next is a little bonus of Delta Confluence. So when we're sweeping time-based liquidity and looking for the momentum trade, we will often find the best setups aligned with trap traders. So a P-shaped profile for highs and a B-shaped profile for lows. Additionally, we see a strong flow of accompanying Delta. Okay, so like Spitty said before, you want to be trading with the aggressive traders. So in this instance, you've got trapped longs, okay? You see all these longs into these highs. This is a London high. And then you get that flush out, you get plenty of bearish delta, and there is your continuation candle entry there. Stop at the highs, look to trade with that aggression, with that momentum, okay? So we do have access to order flow. This is a super helpful tool and really nice confluence. And if you need more on this, Spitty's got a really nice TradeFi Delta profile module there in the refresher course. Right, so going on to risk, obviously speed is an important element to this strategy, so you must practice your entries first, okay? You must practice. A fixed position size will help in this regard, okay? So if you're there and you're trying to calculate your position size based upon your risk, you're probably going to miss a 1 minute candle, and that's the reality of this situation. Typically, what I do is I utilize a fixed position size within a range. Okay, so you can utilize $100 to $300 range, $200 to $500 range. It all depends on your account size, how many trades you're giving yourself across that account, how many consecutive losses are you going to take on that account, for instance. So if your stop falls outside the range, just add or remove contracts. Simple as that. So grow custom to this entry method first and just start on the smallest possible side you can. So 1 micro or paper. Simple as that. Right, so I'll take questions at the end, but we're going to move on to the final section. So if you do have any questions on this, you can pop them in now if you want, or just wait until the end, but we're just going to move on to the final section now. So the final section is all about expansion. Okay, so again, this is how are we going to determine that price is indeed moving with momentum, but it's also potentially expanding, and how are we going to catch those big trendy moves. So expansion can be defined as a trendy move. We expect it to occur after consolidation or retracements. Okay, so how do we spot it? Well, continuation candles aren't the only tool we have at our disposal, okay? Because you're not going to just get a steady stream of 100 1-minute continuation candles, one after the other, okay? There's going to be retracements, there's going to be various little things going on, little consolidation ranges. There's going to be a bunch of stuff happening during that price action. And on the 1 minute, it's typically going to be pretty noisy, okay? So again, by utilizing higher time frames and scaling back a bit, and utilizing like 3 to 5 to 15-minute candle continuations, you can really reduce that noise. Okay, for instance, when I trade like altcoins and things like that, when I typically swing altcoins, I'm typically looking at like 1 hour continuations or 4 hour or even daily continuations in which I trail. Okay, so I reduce the daily noise to a much larger time frame, and that allows me the space and the time to be able to just follow that momentum, follow that expansion. Okay, so we don't just have continuation candles as our continuation candles aren't our only tool that we have at our disposal. Price action markers offer us the ability to determine when price is in the midst of expansion. Okay, so you heard me say this before, price action markers. Okay, so what are these things? So during expansion, we expect the following to happen. Okay, we expect shallow pullbacks. We expect opposing candles acting as support and resistance, otherwise known as order blocks. And we expect pro-trend gaps. So if we're bearish, we're looking for bearish gaps to hold. And we expect counter-trend gaps to fail. So if we're bearish, we're looking for bullish gaps to fail. Okay. Additionally, we're looking for liquidity traps and momentum with the trend. Okay, so there's a little example on the bearish side this time. So some water. Fucking dry mouth. All right. So here's an example of an expansive move headed toward midnight / VWAP, an untested session liquidity. Okay, will you recognize this move? So what have we got? We're in an area of high value. All right. So we're above Asia highs, London highs, all that jazz. Okay. We've formed some nice SMTs, and our proximity to midnight and VWAP is above. So if we're in an area of high value, our proximity to midnight and VWAP is above, and typically we're looking for some sort of short trade. Okay. Additionally, we've got a untested session liquidity. So we've got London lows and we've got Asia lows. Okay. So this is a potential draw. Okay. The context in this situation is we're in high value, we're trading toward an area of fair value and untested session liquidity. Okay. So in this instance, you can see opposing candles act as resistance and bearish gaps are holding. Okay. So you can see here, you're forming bearish gaps, nice momentum out of there. Bearish gaps holding. You can start to see now opposing candles, bullish candles are forming order blocks. They're holding as resistance. Bearish gaps are holding. And we're using continuation candles and momentum down. Okay, so this is where we can look at, there's a little bit more noise. We're not just getting 1 minute, 1 minute, 1 minute, 1 minute, 1 minute like that. We're getting little bits of shallow retraces. We're holding bearish order blocks, we're holding bearish gaps, we're then getting that momentum down, we're forming little liquidity traps, and we are expanding. Okay, this is expansive price action. All right, so this is typically what we want to be looking for when we're in the midst of these kinds of moves, and these moves are very common in NQ, especially when there's a high impact news day. Okay, so like I said before, it's important you scale up the time frame. Okay, so we then look at that exact move on the 5 minute. You can now see the difference where the noise is greatly reduced, and we can now see 5 minute OSB, 5 minute continuation, 5 minute OSB, 5 minute continuation, 5 minute continuation, 5 minute OSB, 5 minute OSB. Get what I mean? So the 5 minute shows a much clearer picture in terms of the 5 minute continuations and the OSBs. Okay, this is an expansive piece of price action, and it's a reduction in noise. Okay, so you're not seeing the little 1 minute like order block forms and all that kind of shit. You're literally just seeing a straight move down. Okay, so here was a cool little trade as well. So you can see this. Have I covered everything there? Yeah, here's an example. Yeah. So here's a cool example of a trade from CPI. I marked this up a while ago on the actual day, I think. But you can see in this example, this is a really nice one. So first of all, let's determine the value. So you can see we've had a move. There's the 886 right there. And we've come down into an area of good value. We've then seen a reaction from daily open at midnight, 10 a.m. So there's a nice bit of confluence in this zone here of value, and then we get a first little sign of momentum. So we've had a little 1 minute inversion there, we've had a continuation candle, we've formed a little order block, things like that. And at that point on the 1 minute EBP / continuation, that's where I actually entered a long. And from then on, look what we're seeing: continuation, continuation, continuation. Then what do we see? Shallow pullback, bullish gap holding. If we're truly bullish, bullish gaps will hold. Okay, so these are the price action markers that are now coming in. Okay, we hold the bullish gap and we extend higher. This now becomes an order block. What happens? You hold the order block, you hold the bullish gaps, you go higher. This then becomes an order block. It holds price. Price begins to consolidate. This is a 1 minute chart. Okay, we're not expecting just a straightforward move up. We're expecting some sort of manipulation of lows, and we're expecting some sort of reaction higher. Okay, so this is where being able to read price action is so helpful in being a part of that expansion, because even if you miss this initial move, you could have been part of this move where we get that little consolidation, we sweep the lows, and then we get a little inversion and we're off. So really important. What else are we doing? Well, we're trading towards untested liquidity. Okay, so untested highs. All right, you also had an IB EQ 50%, 85%. You had a previous month high with an 80% continuation. You know, you've got bias for higher. You also had a context of a really bullish CPI. You know, a bunch of different factors. But what I'm trying to show you here is when price is expanding, we can simply use the candles makeup and the way they action themselves in order to determine, are we still expanding? Are we in an expansive market? Okay. And that's about it. So to pull this back into a bit more of the rules, like Spitty was mentioned, you must use rules, because if you're going to just trade every 1 minute continuation candle you see, you're going to probably have a hard time. Even if you do understand value and you get value right and you find a value level that has 4 or 5 different confluence levels, that level doesn't have to work. Just because it's a very high confluence level doesn't mean it has to work. Okay, even if you see a really great strong momentum reaction, you see a great 1 minute continuation, that still doesn't have to work. We are at the mercy of the market at the end of the day. Okay, the whole outcome is out of our control. Okay, we just have to work with what we got, and they're the probabilities. Okay, so it is our recommendation that you follow these rules. Utilize high impact news. Okay, so seek momentum trades on those red folder news days during the New York session at those key time intervals. like I said. Beware as well of 10 a.m. news, okay? So just be aware of what news is actually happening, okay? Be aware of the macroeconomic events that are actually happening around you. Most technical traders like us typically want to just ignore the news and just say, well, show me a chart and I'll tell you the news. That old fucking adage. But in reality, it actually really helps to know what way the river is flowing in terms of the fundamentals. So max 3 trades per session, okay? Very, very, very important. If it's very easy to get lost in the low time frame, so be strict with your rules or you're going to blow up, okay? Like Spitty said, we both took 3 trades the other day. 1 win, 2 losses. That was it, okay? You have to be strict with these rules. I highly recommend using Top Step for this, because Top Step will actually allow you to set 3 trade max rules and it will lock you out when it's done, okay? Next, if there is no high impact news or the environment has been determined as poor, such as Mondays or Fridays, a Monday no news day for me is typically like, do not touch that, okay? Fridays typically for me, unless something absolutely jumps out at me like earlier today, I've got 1 trade that day. I took my 1 trade, that's it, okay? Stick to my rules. So this is really going to help you in terms of your actual progress and your actual process. So that is so important to use in this. And finally, some closing notes. So we've gone through the momentum trading in its entirety. It's now down to you to find your way of working, okay? So my recommendation is build a model, okay? You've heard me say this a bunch of times to a whole bunch of people. I've got models that I hand off to people and they've seen much more success since following a strict set of rules. Jeffy, for instance. So my recommendation is build a model and have a list of steps that must be followed in order for a trade to be valid, okay? If you've got too many variables with this style of trading, you're probably gonna get stuck, because again, it's about speed, it's about aggression. You're gonna know what you want to see and you gotta know where you want to see it happen, okay? Where and when. So here's one just to get you started. I literally just made this up. So during New York session on a high impact news day, if a time-based liquidity is swept with accompanying trap traders, so if you see a sweep of a high and you got a nice P, a delta, enter a 1-minute continuation candle and simply target 2R. If VWAP or midnight, so obviously you want to trade towards VWAP and midnight, if VWAP or midnight come first, just take profit there. And that's it. It's a very, very simple model, but one that will do probably very, very well. And yeah, that's about it. Questions?
Well, we went for any questions coming in. I just want to add in, I know you've touched on this about moving up time frames.
Mm-hmm.
One thing about this strategy is anything that involves a minute 1 scalp, right? I don't care who you are, whether you've been doing this for years, whether you've been doing this for 5 minutes, it makes no difference. Your heart rate will increase. It's a highly tense way of trading. It's just without fail. So if the trade is working in your favor, and as in my example, if it goes past the 10-minute mark as an example, the quicker you can move up time frames, the better. As Cake said, you're cutting out that noise, because it's very easy to let what could be a runner, let's say you've got 1 contract left in the trade, you've already taken 2 contracts profit, you've got 1 contract left in the trade, and you have got a runner because you're then utilizing that higher time frame picture and a bias. If you leave your chart on that minute 1 time frame, the minute you start to see some bearish price action, you will just automatically close out. You will close out very early. When the reality is that's how you get that good runner. So if you move up a time frame, you just ignore all that noise.
Yeah, I think it is worth mentioning as well. We're not encouraging you to try and catch massive trades. Of course, they're always nice to have, but we're not. This isn't necessarily us encouraging you just to, shoot for the moon. It's more actually to do with if you get stopped out quite quickly, and then you see an idea that you had or a idea that you had then move much further, that's going to have that little psychological dig at you, and you're going to think, oh fuck, I had that trade, I missed the move, this was my idea. Do you know what I mean? You're much more susceptible to tilt. Okay, so we're trying to get you in a place where you are comfortable with your process, you're comfortable with your strategy, but you open the door to those big wins, but you also don't shut them off either, and you're also protecting that mental capital so you don't go and fucking ruin your whole account because you closed out of a trade too quick. Like, you got a small win and it could have been a huge win. You know what I mean? These are all psychological demons that every trader deals with.
Right, do we have any questions?
So, new bad one, which was, when you shift back to M3 or M5 to reduce the noise, how do you find your entry? No, we were at that point, we should already be in an entry.
Yeah, you should be in your trade by that moment.
We're basically going one upwards. Runners should not be the norm, as in price ranges more than trends. Yes, but with something like the NQ and this style of trading, you will catch runners, and if you are too quick at getting out, you're probably going to have a good hit rate, you're probably going to make some money, but there's going to be a few times where you think, fuck, if I would have just held that, you know what I mean? So at least open the door, maybe take a partial, maybe trail stops, maybe, whatever, but just at least open the door to big wins.
And I think context is key with this, because as much as I completely agree with you, Enzo, price does range more than it trends. We're talking minute ones here. So a runner can literally be the London range, as an example. That would be a runner to the other side of the range. So context is king with this. I'm not talking a runner where, when we've seen quite recently, NQ just blasted through 3 days worth of price action in one move. Talking about a runner from one side of the range to the other side of the range. So, yeah, that's cool. Yeah, just automatically, we're not swinging for the moon with this. We're still operating within intraday trading, shall we say.
Yeah. And when you are going to be looking for a longer, more extended move, like I did yesterday, it has to have a solid bias. It has to have a solid idea. So I have seen Newswicks form dozens, or maybe over 100 times, and 9 out of 10 times those guys fill. Yesterday was just that one. Okay, so I know if I see a big fat Newswick, I want to be trading towards that cunt, and I was happy to forego smaller amounts or smaller profits in pursuit of that larger trade. Okay, and that could be to my own detriment. It could also be to the fact that, streaming, whatever. I don't encourage people to do that, but what I'm saying is that whole idea was rooted in a solid plan. Okay, and that's what we're trying to say here. This is why it's an advanced concept, because you need a solid plan if you're going to shoot for higher targets. Otherwise, if you don't want to do that, you don't want to be advanced, like I say, start off by simply looking for value, finding the continuation candles, and just trailing out, or just following the continuation candles until they stop. Okay, you probably have a lot of success with that. Spitty's evidence is very much that you will have a lot of success with that, because that is pretty much how he does it. But in some cases, he's also got the risk management capabilities of catching those bigger moves, and he does often do it, like he did yesterday, because he opens the door to it.
That's really... Can you bring up yesterday's journal?
Yeah.
And then my screenshot. There we go. I don't know if you can... Oh, you can. Nice. Right, so if we use this as an example of momentum trade, so we'll use the first one on the furthest left, so that is my trade 1. Okay. So obviously we had that Newswick. Now with the same concept with this, I'm looking for news high and news low to be run at some point. Because that's typically what happens. It's an inefficient move regardless. So therefore, we've seen this happen. It's come back down. Now, price has come into an area of interest. This is key. This is key. I'm not randomly trading continuation candles in the middle of fucking nowhere. So, NQ's come into the golden pocket of that news move. At the same time, you've got ES hitting lower band 1, which is it's kind of greeny blue on there, but yeah, that one. Which I also believe was value area low at the time on the day. Now, I know from this point, because of something that I'm going to teach you next week, ES from that moment has got a 63% chance of moving above VWAP and into upper band 1, which is the blue one above, by point of control. So I've got that probability in my favour. So I'm thinking, right, well, I've got 2 assets in a confluent zone. I see that red candle on the NQ screen as a bullish continuation candle. As soon as I see that, I then hit it. That's what I'm entering, and my stop, rather than using the Newsweek low, because if it goes below that, I'm expecting the Newsweek low to go. So therefore, the other side of the continuation candle. The next candle opens up, it pushes up, so therefore now I'm fairly confident that that lower part of the candle is not going to go. So therefore, I'm now fairly comfortable in this trade. As much as I don't get a continuation candle afterwards, it goes sideways for a bit. However, ES is holding band 1. So I'm happy with that. Then I see another bullish momentum candle that leaves a gap. Even great. So therefore, it's now working in my favour. So I didn't have to enter that second position. But the only reason why I entered that second position is because my position size for that first one was quite low.
Also, just to add to this, look what you've got as well. So in terms of expansion, look what you've got. You've got a bearish candle, right? Support and price. You've gone down into a bullish gap. You've expanded out, and those bearish candles have now become support. That order block has just formed. So you've in a kind of a different way, because you're not really looking at it, but the series of down closed candles, once you close above them, and especially since you're delivering out of this gap here, that then becomes your order block. And look where your backtest there.
Beautiful. Straight back into that VWAP, into that order block. Then you push up again. So then I get my ES stat, so I get my 63%. So I'm happy with that. So therefore, I skim a little bit of profit. Now I don't give a shit what happens. I'm completely risk-free on the first trade. The second trade, technically I'm not. But the first trade, the momentum trade, I'm completely risk-free at this point. Then price continues up. So therefore, all I do, sensible, I just trail my stops. And I just use candle structure. And if you watch that module, and obviously you can go back to it, I ended up, just before New York came online, my stops were just below those equal lows because I was just utilizing structure. And trading gods were in my favor yesterday. Didn't take me out. Pushed up. We got the full TP. I didn't expect it to go there because I was just trading a bit of momentum, but I had a good reason for it to go up there. And then when it started coming back down, we had a good reason, likely, for it to come back down to fill the wick low. However, as an interim momentum trade, we have New York comes online, we come down, and again, this is utilizing Merlin and Cake shit, is this. Price comes back down, and I heard Cake on that stream saying, I'm waiting for the next 15-minute candle. Because it was a bearish candle. So therefore, the likelihood is it was going to take that low. Now, that low was midnight and developing day TPOC. Okay? At the same time, we had ES hitting VWAP again, which was based on an 88% probability that she was going to hit VWAP. Now, context, ES is extremely bullish. Extremely bullish. New all-time high. It's fucking breaking out, let's be honest.
Yeah.
So you've got ES hitting VWAP and point of control. And I'm pretty sure that was value very low at the time as well because of the compression that happened before that news. It's fucking ridiculous. You can actually see the end of the compression there on the left-hand side of the ES chart. So you had massive confluent zones there. You've just had that 15-minute sweep. As soon as I start to see a bullish continuation candle forming, now admittedly I was very early with this, you could have got in a lot later and still got away with it, but as soon as I start to see that bullish momentum in my favour, I'm instantly hitting buy. Stops below that low, nice and simple, If I'm wrong, both assets are going to lose key support because this is the key of this. You've got ES in a 3 confluence zone. You've got NQ in a 2 confluence zone. I've got 5 levels of confluence there. I'm fucking happy with that to take a momentum trade out of this. And then it runs. And as soon as it starts running, I reduce my risk. As soon as that first minute 1 candle's printed, I'm at the bottom of that minute 1 candle. As soon as it carries on going up in my favour, I'm into profits. Did I expect it to go all the way up there? No, I didn't. I just let momentum dictate what was going to happen. And then once it started going in my favour and printed 10 minutes within to that trade, I then started utilising market structure as my stop loss placement. It's as simple as that. And if you watch that module, you'll hear when I got stopped out as well of the balance. But on any of these trades, I've only got a small part that I'm letting run.
Mm-hmm.
But that is your perfect example of a continuation trade, especially the first one. But then the first going into the second then utilises what Keiko was talking about on stream, taking on board a higher time frame context.
Yeah, so if you compare that with mine. So what I was doing was I was looking for this because this was my draw. I had a lot of confidence in this and I really wanted it, right? So my idea was we sweep the highs, I'm going to look for a short down to those lows. I ended up getting stopped out on trailing for a small win. I then look at this as a 15-minute CISD, so I'm expecting this as some sort of 4-hour swing formation, but it just shows a lot of strength and it just keeps going and going. It stops me out there. I then get another attempt there and another continuation candle, but I'm not just randomly shorting highs. I'm actually utilizing this as well, the delta. So you can see at this delta, on the initial high, you get that nice amount of trap sellers there. Sorry, trap buyers. And you also get the nice amount of trap buyers here. So I'm utilizing those. But price was just too bullish. And I ended up finishing the day with less than half an hour lost. And to be honest, I'm more than okay with that.
Pull that screen back up again, Kirk.
This one.
This is a really good example. If no, the Delta one. This is a really good example. Watch my slow bleed module. I've got a slow bleed module. Now, seeing a slow bleed in an uptrend is much more rare to see, which is why it will catch anyone offside, me included. This is a perfect example. If you flipped that and looked at that as making lower lows and lower highs, and you saw those P-shaped profiles at the bottom, and price was in an area that you would wanted to do business, you would long those every fucking time. And that's how you get caught out in a slow bleed environment. This is the same, but this is in an uptrend. It's very hard to spot in an uptrend because CVD, typically speaking, doesn't show it at the same time as it does in a downtrend. A slow bleed down, CVD will be your guiding light and save you from taking those problematic trades. In an uptrend, this is a lot fucking harder to see. So you will see absolute beautiful highs and then price pulling away from them in your direction. But this is just perfect because then all it does is it comes back up and fucking takes it again and does exactly the same thing every time. This is a slow bleed up. That's a perfect visualization of it. There's an additional module right there for you.
Yeah.
And nobody would see that coming.
Yeah. I was going for the Hail Mary. I can't lie. Look at these. I was going for an absolute Hail Mary there. But I'd already made money in the day. It was a fresh Top Step account. The risk was super well managed. You know, I was happy to shoot for the moon there, but yeah, I could have done a lot better out of that situation. And you know, we do encourage you to utilize the aggressive trailing strategy. You don't necessarily have to swing for the fences like I did in that instance. But in terms of just the simple recognition of momentum, it's going to take you really, really far in New York, but it will also destroy you if you don't utilize it well. Okay, you don't be sensible. You have to have strict rules. I took 3 trades there and I was locked out. Okay, I didn't take a million trades tracing that draw of liquidity. Okay, I had a plan. I attempted to execute on that plan. It took me 3 attempts. I ended up coming out with a small little paper cut. Okay, for me, that's actually a successful session. I still deem that as a very successful session because I executed what I expected to do. Well, I executed my plan. Okay. So, and in Spitty's instance, you can see what is he doing here? He's determining value. He's looking for a sign that the market is reacting to that value, and he's trading with the momentum. Okay. And that is all we are doing here. We are determining value. We are trading with the reaction, following the momentum. Okay. We can use the bigger picture, the context, all we want, but it's better just to start off with the very simple nature of where do I want to see price react from? Where is my AOI? What do I want to see when price gets there? And then build from that. Okay.
Just to add to that, like, for anyone watching this back in the future, I strongly advise you all to go watch the 11th of September 2025's New York stream, because you will hear me on all of those trades, especially the third one, which is a serious momentum trade. I did not expect that to go up there. I wanted a smash and grab. None of these momentum trades I am expecting to run. That was just fortunate. It went in my favour yesterday. I did not expect all those to go take new all-time highs. Well, sorry, newer highs on the day. I did not expect that. I wasn't looking for that. I wasn't trying to trade that. I just wanted that initial momentum. And then I'd be out of that trade.
Also, this is a really good one to go and watch as well. This was funny because this was a day where it was super, super bearish. And if you look back at a higher time frame, there's literally like one 30-minute green candle. Me and Spitty traded that one tiny candle. But this is
brilliant.
This is another great session to go and watch. So that is actually the 5th, I think. This one here, 5th of August. So is this one. You can go back and watch the recording. Noob, you've asked for the link to that, so it's all in this. Okay, so if you just go to the Spitfire Traders Journal, it'll all be there for you. Okay, I'll just copy that link for you, and I'll include it in our module as well. Right, any other questions?
Just to reiterate, as Cake said, practice with either a really, really tiny amount that you're not going to give a shit about, or practice on paper. But if you're going to practice on paper, make sure you are using proper execution.
Yep.
Because you've got to get used to that fast thinking, that fast-paced environment. You are trading minute one candles.
Yeah.
And if you practice this for a few weeks, months, and you just think, I'm just not getting anywhere with it, it's not working, it's fine, walk away from it. You don't have to be able to do this.
Yep.
This is advanced.
Most of you will just probably copy trade our streams anyway. Evelyn. Max.
Yeah, just get used to it. And as I say, if it doesn't work for you, don't beat yourself up, because this doesn't work for everyone. This is not everyone's cup of tea. If you need to wait for a 15-minute inversion and then a 5-minute whatever, then you do that.
Yeah. Like I said,
Okay.
like I said in the closing notes, build a model. That's the best way you're going to be able to go about this. If, then, when, or if, when, then, whatever. Look for something specific to happen. Have a specific entry criteria and have a exit criteria. Okay, a lot of people go wrong because they have no exit plan. Okay, again, to use my example from yesterday, I had an exit plan. It was a very ambitious one, but it was still an exit plan. Okay, a really good place to start would be like 2R VWAP or midnight, whichever comes first. All right, and utilize those trades and that learning in order to progress further. Okay, if that's something you want to do. And finally, do not use this on anything other than NQ. Maybe gold, but please just use it on NQ. It's not worth. Yeah. It's not worth the hassle trying this on Bitcoin. Please don't do it.
No.
I'm talking to
In
you
fact,
about
if you look at the Merlin stats for minute ones on Bitcoin, it's not favorable.
Mm.
There's a lot of assets that it's not favorable on. You need the volatility, but you also need the liquidity. Now, typically speaking, those two things don't go together.
Mhm.
NQ is a unique beast because it does go together.
It's a liquidity monster.
That moves like in a liquid asset. That's why it's a beast.
What would you do in this instance? I was wanting to enter on the 15-minute on the sweep of the 15-minute candle because we had a 1 hour continuation and the 4 hour swing, but it left equal lows, and I wasn't sure whether to enter. Looking back, obviously I should have. Right. First thing I want to point out is those are equal lows on the micros. What did the minis say? Let's have a little look. You're around midnight. Let's have a look. So those haven't been taken. Yeah, that's... So this is one of those trades where, like, are you in an area of value right now? Okay, let's consider it. Where you've got point of control, you've got midnight, and you've got VWAP. So if you want to determine that as value, go ahead. Spitty probably find a way of looking at this with ES's bands and things like that to determine value. But for me, that's pretty much where I want to be trading to. I want to be trading toward that. I don't really want to be trading away from that. Does that make sense? It's kind of what I'm saying. I want to trade in, the proximity to midnight and VWAP is very important to me because I find the best momentum trades are going to come in the direction toward that. Okay, but coming off of that, yeah, you got a nice 1 minute continuation, but what are you really looking for up here? Yeah, I suppose. Like, what is your bias? You had a 15-minute, yeah, so you've got a 4 hour swing formation. Yeah, you got that 15-minute. So you're looking for the 4 hour high. Yeah, it's not a bad trade. It's really a decent trade. The fact that it didn't sweep the low, if you've got that 1 minute continuation, which you do. Sorry, 5 minute. Yeah, you got a 1 minute continuation. I was looking at the 5 minute, wasn't I? You got a nice big 5 minute continuation. There is room there for a continuation trade. You can see the continuation candles are showing nice momentum out of there. Again, it all comes down to what are your predefined value levels. For me, that's not really a predefined value level. Okay, if I was trading momentum trading, I wouldn't really be looking for trades off of that personally. But in terms of the overall idea, I get where you're going. You've got a nice 15-minute CRSD, you've got 4 hour highs that you're expecting to be taken out, you've got a 1 hour continuation. I think contextually, that's a great looking idea. But yeah, in terms of it not sweeping the low, first question, did ES do it? No. Well, in this instance, that's actually quite a tricky bit of price action, isn't it? Typical off VWAP.
Yeah, I think from my point of view, did the trade meet your criteria? No. Well, it wasn't your trade then. It's as simple as that.
Mm-hmm.
It did. You had the idea right. You had the area right. Yep, all fine. Did you see what you wanted to see in that area? No. Well, it's just no trade. Simple. And that's one of those. As that runs in the direction that you want to trade it, you need to forget about that because it didn't give you your criteria. And that's how I think about things. That's why you'll hear me say on stream quite frequently on a morning saying, if this turns around here and runs without me, I'm fine with that.
Yeah.
Because I want to see something specific.
Yeah, you did have that 15-minute continuation down. So the fact it hasn't taken that lows, it's kind of like sloppy price action, which is exactly what you expect from this little cunt, VWAP. That's why
on a Friday.
That's why I don't like to trade from it. I like to trade toward it because price action around VWAP often is shit.
However, next week you will like VWAP.
Is it because it's considered discount in this context? Then it's running to premium. I may have jumped ahead a bit too far there. Eki, can you re-ask that question a little bit, please? Just so I know exactly what you mean. You said that you'd rather trade into than out of. Yes, exactly. So, like I said here, the proximity to midnight and VWAP, right? They act as a fair value. Okay, so when price is above VWAP or above midnight, it's a premium. Okay,
Yep.
so how do we determine value by not just fibs and things, but other levels on the chart? If we're above VWAP or above midnight, I'm looking for shorts to return back to fair value. Okay, really, in essence of momentum trading, you want to be doing those mean reversions, like what Spitty's been talking about. You want to trade from an area of value back into an area of fair value. Okay, you're not trading from POCs, you're trading from value area lows. You're not trading from midnight and VWAP most of the time. You're trading toward those levels. Okay, you're coming from value back into fair value.
Anything above VWAP is expensive. Anything below VWAP is cheap.
Yeah.
Traders will always look to find value, true value, throughout a daily session, which is why price will most likely always return to VWAP. I mean, it will every single day at some point.
Yeah, it's inevitable whether VWAP catches up with price or price catches up with VWAP. Eventually, you will return to VWAP.
So it's the only true indicator. Outside of Merlin, which is more true than any other indicator.
Oof, here we go. Right, look at these buyers into highs now. So obviously this is not a session that we would be trading momentum because it's London. But if this was New York right now and I see something like, let's just say this was London highs and you're in New York, you see a nice little plunge above highs and you've got a nice batch of like buyers. If you start to see some like continuation candles back into the range, then you could look to trade on side with that momentum. Okay. Basically what I did yesterday. Right. Any final questions? Because we have been going for an hour and a half now.
Oh, wonderful. Well, technically we're at 3-1.
Yeah, exactly. Yeah. But it needed to be done because it's going to set up next week's module, and it encompasses pretty much everything that we do in our New York trading sessions. So hopefully it's been really beneficial to you all. Any other questions? And if you're watching this back in the future, like Spitty says,
Nah.
just go to the Q&A section of the education area. You can ask me as Spitty a question. I need to be an NQ trader. Yes, you do, Eki, because I've seen your scalping on altcoins and you would have so much more fun on NQ. Just be careful because it moves quick. She fast.
Oh, she real fast. Great, thank you.
Rather be in than out. Better out than in, I always say.
All right, Dad. Smash and grab. Yep. When looking at Delta, I know it's recommended to look at 30 minutes, but when doing this method, can you drop to a lower to look at real time? Yes, so I don't look at 30-minute NQ Delta. I'm not bothered about that because I'm not swing trading NQ. So as Cakes often has on his, you'll see a minute 1. I have a minute 5 on mine.
Yeah. I bounce between the two.
Yeah, either or is absolutely fine. You got to think in terms of if you were trying to look at a minute 1 delta on Bitcoin, it's not going to show you much because the liquidity of Bitcoin is diluted across so many places. It's unreal. Mm-hmm. When you are looking at minute 1 on NQ, it's a highly liquid asset, and predominantly most day traders are using CME as in NQ. Rather than US 100 on CFDs. So you will find a much more clear read. So yeah, if you do have a good P-shape minute 1 dildo above a major liquidity zone, then yeah, take that into account. But make sure the dildo closes first. Just always remember that, because that P-shape can quickly disappear.
Yeah. I think you might also get confused with Delta and TPO. Like TPO is typically your 30-minute. With Delta, in terms of how we read it, yeah, it's super low time frame, usually 1 to 5 minutes. So what I'll do is, like, in an instance like this, I've got, like, right, there's a nice 5-minute sort of P looking thing. If I go to the 1 minute, you can see it's not actually as clear. So what I'm doing is I'm just constantly looking for clear signs. So I'm often just swapping between the 1 and the 5. In London, I have been known, well, not known, but I've done, to look at the 15 as well. Look at that 15-minute candle right there. Beautiful P shape. What have we done? Where's the context? Okay, so we've just taken previous day highs. We've taken 4-hour highs. We've got S&T. We're above daily value area high. We've just formed a big batch of positive delta above liquidity. So there's trap traders. Now look what's happening. We're flushing. Okay, this is the kind of trade that we would typically be looking for in New York. Okay, there's not a lot of delta pushing it down, aggressive like selling yet, but you can start to see there was your first continuation candle right there. Stop at the high and look to just simply trail. Now 1 minute continuation, we take the low, 1 minute OSB, you could go pretty much into break even immediately there. Okay. There we go, start to flush a little bit. So we're above value area high. So if value area is high and we're above it, we're in an area of high value. Therefore, we look for shorts. We look for trap longs. We look for momentum. Back toward VWAP and midnight. And that is it. I mean, I was thinking of Delbo, got the time confused with TBR. Yeah, fair enough. Right, is there any other questions? This is going to turn into an absolute screamer of a trade now.
Yep.
Look at that. Big continuation candle on the 15-minute there. Oh, no, it was a 5, sorry. That was a 5. So big, fat 5. Okay. Beautiful.
Right. Let's wrap this up, otherwise we're going to end up getting stuck on today's price action.
Yeah, I'm going to go and relax. I don't think I'm trading today. Well, I'm not trading today.
No. Not spoiling a good session yesterday.
Nope.
Right. Thank you, team. And thank you, Kick. Awesome.
Thank you, Spitty.
And we will catch you all soon.
Catch you later. I'll upload that straight away. I'll put the link out on my channel. And yeah, catch you later.
Says bye.
Bye.